So you think interest rates are going to go down, not just stay where they're at?
Correct. I think interest rates will go down.
And the property values will stay or will keep going up?
I mean, property values are inflation, right? Like if inflation is bad, property values go up. Great time to borrow money.
I have heard, at least in my local market, banks are responding to like foreclosures and short sale offers a whole lot quicker. What used to take months for short sales to go through, banks are responding same or next day.
We're at the point in 2 years where 100% of our tax revenue will go to just paying interest. That's not sustainable. Federal Reserve put itself in a really interesting position in COVID whenever it started endless money printing. They didn't recognize that it would create inflation. Then they finally realized it would create inflation. And then they said, okay, well, let's raise the interest rates back. Well, this problem happened when they printed all that money in 2020 is a bunch of people said, well, we need to make investments. We need to earn a return. Interest rates are at 0%. What can we do? The number one most invested thing in the world is United States Treasuries, bonds, whether they're 1 year, 13-week, 5-year, 10-year, 30-year bonds, right? Bonds are a fixed rate of return, AKA I'll give you $1,000 and you're going to give me back 2% of that guaranteed by the US government, right? Well, you got to think of bonds as this teeter-totter. I don't know why I'm on this word tonight, but the lower interest rates are, the higher the price of a bond. When interest rates go up, the price of the bond goes down, right? So what they've done is they've gone out and they have reduced the value of all these bonds by raising interest rates. Therefore, the value of all these bonds that are issued has gone down. Banks and other financial institutions will continue to fail because all the assets they have one of two options. They can go sell it at a discount and take a major loss on the asset they bought. Think about it like this. I go out and I buy a storage facility for $10 million at the peak of COVID. Real estate values go down. Now it's worth $7 million. I take a $3 million loss. But guess what? I talk about this in our strategy. As long as you're buying that piece of real estate to hold for the long term, doesn't matter if the value goes down because eventually the value will go up. And as long as it cash flows in the meantime, we're good. The position banks are in is the value of their real estate, the value of the things they've invested in have gone down, but they don't have the option and the ability to hold. If they could hold it for 30 years or 10 years, they would get all of their money back. But in the case of SVB and Signature Bank, they had to sell because people came to them and said, hey, we need our money. They didn't have any money, so they had to sell assets. So the Federal Reserve got together and said, hey, we're going to bail them out. How did the Federal Reserve do that? They started printing money to give to these people in exchange for their bonds. Okay. The Fed pivot, AKA, hey, we're going to try to fight inflation back to, hey, we're going to make sure everything is good. That happened last week. Okay. The Federal Reserve went from trying to reduce the amount of asset it owns, which is called its balance sheet. They turned it around over the last 6-7 months. The Federal Reserve has drawn down its balance sheet $300 billion. It's over the last 6-7 months. Last week, they printed $400 billion. So the Federal Reserve turnaround has already happened, okay? They went from, we're going to raise interest rates a lot more to in the last meeting, they said, we're not sure if we're going to raise interest rates anymore, which is as good as we're not raising interest rates anymore. So what's the bigger problem here and what's the opportunity? Number one, inflation is going to be really bad over the future. Inflation is going to be really bad. They're not going to let these failures happen. The federal government right now, United States, we owe whatever it is, 30 some odd trillion dollars in national debt. Well, guess what? We do that through these treasuries, which we're talking about. Well, if the government issues a 5-year treasury, that means that what we issued in 2018 has to be paid off this year. Well, if they issued it in 2018 at 3% interest rate, and they have to pay that off, how do they pay it off? They pay it off by generating a new one. Right? It's like I'm paying off a loan by taking out a new loan. That's what they're doing. Well, if the old loan I'm paying off is at 3% interest rate and the new one I'm taking on is at 6% interest rate, I don't really make any money, but now my mortgage payments double, right? That's the situation the United States government is in. The US can't do that, right? We're at the point in 2 years where 100% of our tax revenue will go to just paying interest. That's not sustainable. Right. So anyways, the point of this is interest rates has to go back down. We really can't fight inflation. I think that real estate prices will start to go up a lot. I think all sorts of prices will start to go up a lot. And I think we're in for 10 years of bad inflation is kind of where I think we're at. I think it's a great time to borrow money. I think it's a great time to buy real estate, particularly real estate that cash flows. I think we've got a bumpy 6 to 12 months ahead of us, but I think it's a great time to buy because there's no other path for the United States economy out of the situation we're in other than reducing interest rates and letting inflation hit bad. So I kind of think that's our route out.
So you think interest rates are going to go down, not just stay where they're at?
Correct. Yeah. I think interest rates will go down.
And the property values will stay or will keep going up?
I mean, property values are inflation, right? Like if inflation is bad, property values go up. Great time to borrow money.
I have heard, at least in my local market, banks are responding to like foreclosures and short sale offers a whole lot quicker. What used to take, months for short sales to go through, banks are responding same or next day. And just goes to show they need liquidity, need as much cash on hand as they can get.
Certainly. Yeah, certainly. I think that timing will be really important to what happens to some people, right? Like it's very possible that you have a loan that's due in the next 6 months. You can't get new financing for it and you get foreclosed on. And then 2 years from now, the property is worth 50% more than, what it is today. So I think that timing is very important. I mean, timing is extremely important to us as real estate investors, for how we finance things, for what our business plan is. All of that is extremely important, especially in, uncertain times. So again, I think it's a great time to borrow money. Banks are still lending. I'm wearing a collared shirt because I just left a meeting with a bank, right? They're still lending. Has anybody here ever seen me in a collared shirt? No, not me. Anyways, so banks are still lending for sure. I think it's a great time to buy, honestly.